Great, great. There's Daniel from Ondo State. Weather is quite cozy here. Wouldn't say cold. Okay. There's Abby Charles from Lagos. Great, great, great. Good. If I continue, would not start. So let me just get to it so that I don't bore you with my very long talk, right? So good afternoon, good morning, good evening, everyone, from wherever you're joining us from. My name is Omoloye, and I'm the Venture Development Lead at Circular Business Platform. This particular topic for today is from idea to MVP, how to access finance for product development. We are actually very delighted to see all of you. I just want to share a little bit about who we are and why this workshop, why are we having this at the moment, right? The people behind this, the two organizations behind this are the Circular Business Platform that I work for and the Nigerian Climate Innovation Center. Both of us together, we've shared commitment to building an ecosystem where circular economy innovation thrives. Our two organizations, we've worked closely for some years now, and we have been working around strengthening capacity and connecting innovators with resources through different programs that we run individually. And also we working primarily to create the pathways for sustainable businesses to thrive. Can you all hear me? Please confirm.
Yes, we can.
And just also, okay, great. And also to create, to give some ground rule, if you're not speaking, please ensure to mute your mic. I'm sure the admins are also on standby to help generally mute people who are not speaking so that we can have a very good time as well. So let me just continue and say that we've run open innovation program. We have run one we have run a couple of open innovation programs at Circular Business Platform, and also Nigeria Climate Innovation Center, NCIC, has also run a couple of open innovation programs, and also other programs around circular business model development, and also sustainable and climate focused business model development programs. So when about last year, sometimes last year, we came together, we thought that, okay, there's a need to develop a community of practice. We realized that there's a lot of work that needs to be done to build the ecosystem. And we thought that building this product development community to address some challenges around whether it's prototyping, whether it's standardization, whether it's certification, we figured that there could be some things we could do to see where build a community, a peer learning network where entrepreneurs can exchange ideas, share share freely and support each other in their product development journey. And that was why we started the Circular Economy Entrepreneurship Peer Learning Platform. And that community has been growing. We have been doing our work, both organizations, trying to see how we can create more opportunities for the circular economy entrepreneurs to build the ecosystem, to have more people develop viable products. And that has been our mandate for since we started the community. And why does this workshop matter? Why are we having this workshop at this point in time? One of the key things, based on our relationship based on our conversation with the different entrepreneurs, with the different people working, is that there is a major challenge with financing. And it's not because financing, of course, the truth is that there's a little bit of shifting in the world at the moment, and finance is gradually, moving away from, sustainability and the circular economy. But the point is, despite this challenge, there's still a lot of opportunities and there is still some learnings we can take to build viable business, because money follows wherever there is viability. Yes. So whether whether there's some challenge with getting more funding into the secular product development, if we build business rightly, we can as well steer some more finance into, our business model development. And that is why we are having this workshop at this point in time. So I know that my own face is not that fine. There is someone who is finer than myself, who would be able to, steer the conversation, who is also a very active member of our product development community. She's an entrepreneur herself. She's been working within the secular entrepreneurship for a couple of years now, has a very strong finance background as well. And I'm happy to introduce Anita Odiete, who is the founder and CEO of Atunlo. Let me say that Atunlo is a very interesting business name. Atunlo means to reuse in Yoruba, and she is not particularly Yoruba, but she found that it's good to use that particular word because it then depicts what you're doing. And I'm very, very happy to introduce Anita. Anita will be steering the conversation today to talk about how we can build, financing, how we can support the ecosystem, and how we can, drive more finance into secular product development. So happy to introduce Anita. Thank you so much, Anita. Over to you.
Thank you, Oba. Please, you're a fine man. I don't know what you're saying. Good afternoon, everyone.
I'm finer than I am.
You can't compare man and woman now. Good afternoon, everyone. My name is Anita Odiete, just like he said. The goal of this session is very simple. We want to demystify the different funding pathways that are available for circular economy entrepreneurs. We want to explore the different ways we can raise money so we are able to move from concept to MVP and then to scale. So this could be through government-backed loans, through international development finance, or catalytic impact capital. Catalytic impact capital. My tongue, sorry. Okay, so let's get right to it. So I'm going to quickly introduce the speakers. We have 3 speakers today. They're leading this session. So first of all, in no particular order, we have Babatunde Omoloye. He's the program lead at the Bank of Industry, and he's led multi-billion-naira initiatives like GEP, NGKs, IDICE, and he also brings a rich insight in terms of government and development finance products for entrepreneurs. We also have Nené Barry. She's the head of the Dutch desk at Access Bank, which is a strategic collaboration with Invest International and Access Bank. So Nené focuses on helping African businesses to tap into the Dutch and EU climate and innovation funds, and she'll be sharing how we can access international finance and manage cross-border risk. And lastly, we have Etemore Glover. I'm sorry if I'm murdering your names. I'm so sorry. So Etemore Glover is the CEO of the Impact Investors Foundation. She's a thought leader in terms of mobilizing catalytic and patient capital for high-impact businesses across Nigeria and beyond. So we're going to start with some opening questions for all the panelists to respond to. So my first question is, in one sentence, how would you define funding readiness for an early stage circular economy product? So can we start with Babatunde?
Hello, everyone. Good afternoon. Good morning, wherever you're listening from. Cindy Omoloye here. All right, so thank you for the opportunity, by the way. Let me quickly dive into the question. So you said funding readiness for startups, right?
Yes, please.
I would say what makes you capital ready, right, is my definition would be that when you've moved from having that idea in, let me say, in your head or in your brain, as the case may be, such that you have moved from ideation into some sort of MVP, right? And not just you having a minimum viable product, but you've gained some market traction, right? That puts you in a good place for financing. So that helps you to maybe raise your first seed round. So for me, that is funding readiness. Moving from idea stage to MVP, and you've done some pilots, which gives you good traction for market readiness and capital injection. Thank you.
Thank you. Can we then go on to Nené?
Hi, thanks a lot. Hello, everyone. I don't know how many time you have, because I would like to, dig deeper into the intro as well. So do cap me if I'm taking long enough. Okay. A bit of context. I'm an engineer working in finance now due to frustrations. Let me put it like that. So the last couple of years of my previous career, I found myself looking for funding most of the times for different projects that we were doing in Africa. I was responsible for our projects in Africa. And I wondered, wouldn't it be better if I'm on the funding side, right? So, and then from the Netherlands, that means Invest International, because they do most of funding outside of the Netherlands. And the collaboration with Access Bank, a local commercial banks, kind of brings the two worlds together. And saying that, getting all that context, I would say it's not easy to get early stage funding. If I look at Nigeria, the Nigerian context, I would say no, you're not ready, because it's not just about getting your business sorted out and getting a clear revenue stream, etc. But it's also about, can you afford the pricing? Can you afford the tenor, etc., etc. And going from that and looking at the structure that we have, let's say the collaboration between Invest International and Access Bank. I'm happy, by the way, to say more about those two institutions maybe later. So if you zoom into that more, then you also look at instruments that Invest International brings in that cater to early stage, like startups or scale-up companies, but also funding for proving the concept, development capital. But then again, you need the Dutch link, right? So I would say through collaboration, it can be possible. And of course, impact drivenness is key. Thank you.
Thank you so much. Etemore, over to you.
Yeah, thank you very much. So I'm going to build on what Tunde and Nené have already started talking about. For me, I would say funding readiness would mean having a strong or a validated value proposition is so important. You want to be able to demonstrate the commercial viability of your product. Having a clear impact pathway, operational capacity to use finance effectively, right, while demonstrating traction, because that's what investors are going to look at, through the efforts of your capable founding members and or management team, and demonstrating, very important, your potential for financial return, because CE business, though it's highly mission driven, it's not charity, it is a business model that will attract, investment, and finally the potential to scale your growth. So this is what funding readiness means to me. And then if you look at early stage, how early you are to with or how late in the early stage you are would require different kinds of capital, and different kinds of capital would need different kinds of readiness. So, but in general terms, you want to be able to prove that you do have a very strong value proposition. And sometimes, like Tunde has said, you want to validate it. You have your MVP, you've tested the market, right? So this to me is what funding readiness means for an early stage circular economy business.
Thank you so much. I think solid points, and I really hope that we're taking notes. So just to summarize what has been said, First of all, you have to have product readiness. There has to be some traction because that also validates that, yes, people actually want to buy what you're selling and you actually do have customers. And just like Nené said, can you afford the tenure? Because that's also another thing to think about. If you're trying to raise funds, are you doing, so is it a mixture of equity and debt? If you're doing debt, can you afford to pay? Can you afford the tenure? Can you also afford the rates as well? Are the rates favorable enough for your business? Do you know how to do a good mix? Because some people always run to loans and then they can't pay back and then they're struggling because they're new in the business. There are a lot of things they couldn't predict. So it's good to understand the diverse funding opportunities that are available. And just like Etemore said, you need to have a validated value proposition, which is similar to ensuring that you have traction. Because once you have that product market fit, traction does no longer become a problem. Okay, so I'm going to go on to the next question, which is, so from your experience, what's the biggest misconception entrepreneurs have about raising their first fund of capital or loans? So I'll start with Etemore.
Yeah. Thank you very much. In my experience of speaking to many founders, businesses, enterprises raising funds, particularly those who are mission-driven, they often think that, oh, this great idea, automatically attracts funding, investors will get it, and then, yeah, and investors don't sponsor, don't fund your inspiration, right? And so when they don't fund your passion, you're like, why don't they get it? Investors want to see traction. They want to look at your business model. What are you providing? What are you producing? What's the product about? Is there a demand for it? Who are you creating this value for your customers? Are they willing to pay for this great idea? And then is there, some kind of revenue that can be generated from this great idea? So if you're able to show that, and then you are showing traction to your investors, so that's a great idea. Sometimes it just really puts their head in the cloud. Why are people getting it? And second thing too, I also realize with people who are or in the space of providing value, mission-driven enterprises like CE businesses, right? You have an impact, right? You're solving a problem. And you think that by solving a problem or having your innovation means that there's going to be a demand for your product or services. You will be shocked when you get to the market. Nobody, is demanding your product. And for innovators, it's not a crime because then it means that you have to go back and ask yourself, how do I create demand or push demand? And it's a journey. So sometimes people are not seeing the solution, but you have to make them see. And once you're able to create that demand, then you want to start pushing for commercial viability of your product. Then investors can now see a pathway for commercialization of your idea. So these are the two main things I see when I speak, particularly to innovators. Thank you.
Thank you so much, Nené.
All right. Interesting observations indeed. And one of the things I would add to that, the way of seeing things is that, banks like boring things. Seriously, like you can come with the best innovation, make it complex and whatnot. We just want to see it simple, clearly, especially the revenue stream, right? So that's one of the main misconceptions I come across. The other thing is timing. Even today, someone sent me a proposal yesterday, and today they sent me a message saying, if you are too busy, maybe you can forward it to someone else. I'm like, okay, I'm the fastest one. What do you mean? So it doesn't go that fast, we need to take our time to do different types of due diligence, etc., etc. And the other thing is that most people or most entrepreneurs think that interest rate is actually the main problem. But turns out it's not, right? There's collateral. Most people really struggle to come up with the collateral, especially in the SME field. There's an own equity contribution that also pops out at some point, and they're like, oh no. And think about, let's say, the FX risk. Like sometimes it seems very attractive to get funds from abroad because then you can talk about single digit, But if your proceeds are in Naira, that's a problem, right? Along the line. So yeah, let me park it there. Thank you.
Thank you so much. Babatunde, over to you.
All right, thank you. So in addition to what Nene and Etemore had said, the addition I would simply add is most times we founders believe that investors only want to invest in ideas, right? And be it ideas or traction at that point, but who you are in terms of the execution team is also critical to an investor. How much you commit to the business, they want to know how much of yourself, how much of your sweat equity, your structure in terms of governance, team formation, all of that helps in terms of making investment decisions. And that is very critical. It's not so much in the idea. The idea could be fantastic. The markets could be there, but when they could project that in 5, 10 years from now, I can't trust this person I'm seeing or that is pitching to me, they rather not invest in such ideas. So that execution team is also critical. They are not just investing in that idea. So that will be my addition on this.
Thank you so much. These are all very valid points. And yes, some people don't think about all these things. Just like Etemore said, I have an idea. It sounds great to me. It sounds great to everybody around me. But when I go to an investor, it's like, okay. And I wonder that, but and the investor, I've seen like 1,000 of you. Like there's really nothing new under the sun anymore. So sometimes these entrepreneurs get crushed, like, now wow. But it doesn't necessarily mean that you should think that, okay, this thing can fly. It's literally just you going back to the drawing board. You take the feedback, think of the things that you can improve on, go back to the drawing board, make those changes. Don't just because of one meeting and maybe somebody didn't match your energy, just feel like, I'm useless, this can never work. No, that's not how it works. You have to keep iterating. Eventually, you'll find a perfect fit. And when you go back to some investors and they see that you've actually put in the work, they're willing to listen to you and even give you more feedback into some areas that you're not seeing. So thank you so much, everyone, for all the points. And I really hope that we're all taking notes. So let's not be making the same mistakes we're making before. Okay, so we're going to go into some more detailed questions. I will start with Babatunde. So we are aware that BOI has some of the largest intervention programs in Nigeria. So which of your products are best suited to help a circular economy founder in terms of moving from prototype to market-ready MVP? And then if you can also help us go through some key eligibility criteria that we need to consider, that would be helpful.
Okay, thank you. So for BOI, we are a development finance institution, right? And the core mission for us is to transform industrial sector. So the concept of startup or the global concept of startup has not been well adopted in DFIs. Even some of the commercial banks are just getting to adopt and building special products for these sectors. Howbeit, BOI has been doing a lot in terms of supporting startups. And I know most of us also mix startups with MSMEs, right? But really, in terms of global understanding, is not the same. So speaking more with regards to financing opportunities. So the structure in BOI is there's the medium and small, micro, medium and small enterprises. There's a large enterprises and there's a public sector and intervention programs directorate. So these are the 3 directorates in terms of structure. However, since this is more of a startup inclined discussion, the financing that is available is more focused into interventions, right? That is majorly for startups. So BOI had done programs, special intervention programs like the Graduate Entrepreneurship Fund, where graduates right from NYSC can access startup capital and they just use their NYSC certificates. They pledge their NYSC certificates as a collateral, right, for the period for which they would repay the fund. There's also the Youth Entrepreneurship Scheme that we did with MTN. So there are intervention programs like this that are available. And in terms of interest, the maximum interest on all of this, the bulk of these programs are 5%, right? So it's a patient capital and a good one for startups. But I would speak more specifically to programs that are actively running, which is IDICE. So IDICE is investment in digital and creative enterprises. It's an innovation of the federal government, though funded by multilaterals, the African Development Bank, the French Development Agency, the Islamic Development Bank, and the Bank of Industry also committed their fund. It's a $617.7 million fund, which is focused towards the tech and creative industries. So this program provides access to capital in form of equity and debts. And for the equity portion of the fund, so as to make it liberal and make it easily accessible to startups within the Nigerian space and even to the international markets, we are procuring independent fund managers. So we'll have VC firms manage the equity fund. And I can announce to you that for the tech fund, for those who are tech or digital enabled founders on this webinar, the Ventures platform has emerged as the technology fund manager for the IDICE fund. And in a couple of months, say 2 or 3 months at best, they'll open up the channel for calls, right, to start direct investments in startups. So we'd have 2 fund managers, the tech fund manager, which I'd announced one, and then we would have a creative fund manager. But we have another SPV, which is a fund of funds vehicle that allows for investments in other equity fund. So this will just further help us catalyze the existing fund and have better spread across states like Lagos, Port Harcourt, or key states that most startups typically would reside or migrate to for funding. So that helps them to go to as much as to deeper routes like going into Nasarawa, Kebbi, Abia, and all that. So one thing government had also done in funds like this is been backed by a 30% first loss. So for everybody investing in such fund, the government has insured it with their own funds to the tune of 30%. So any loss to the tune of 30%, the investors will not have to bear such risk. Governments will take up such risk on behalf of all the investors. These are, IDICE is one of the key programs that provides patient capital to startups and founders can log into. So that's a good opportunity. And I would just advise all founders on this call to please follow the Bank of Industry. If we could follow comics and all that on all our social media handles. And I'm not trying to promote the organization I work for, by the way. It's just for what you are so passionate about. If there's an opportunity for you to seek funding, follow those handles, follow IDICE, follow the Bank of Industry, so that as things evolve, you get to know when they're making calls for such investment. So that's it on the equity side. I'll be very quick with the debt one. So for the debt one, there are 2 debt options. One is the fund from the Bank of Industry itself. And what that helps us do is that we have built a special product for this ecosystem, such that the interest rate is at a single digit. Right, even though we'll be routing this fund through partner financial institutions like finance houses, microfinance banks, commercial banks, and fintech. So a couple of them have applied. They are going through like a credit appraisal process. And towards the end of Q4, we would announce the institutions that will be launching these products through. So that's another opportunity for startups to get funded. And the second that there is to it regarding the debt fund is an Islamic fund. So there's a special Islamic fund that permits you to also access that fund. So the only difference between the earlier fund I mentioned, which is the BOI fund, and the Islamic finance, is that Islamic finance follows non-interest banking model. So it's a Sharia compliance sort of funding. And it's nothing different if you're just a founder, if you're an innovative founder and you're just doing your thing. In as much you're not doing stuffs around promoting alcohol and funny, shady businesses, it's something you can access. So it wouldn't be an issue for almost anyone on this call to be able to access such fund. But just for more information, I will appeal to you that you follow those social media handles so that you can get informed as we launch all of this equity and debt products. Yeah. And so you did mention the eligibility criteria, right? So to quickly speak to that, I think one thing that is also key to all founders is such that we have like, will I say an investor pack, such that anytime you need to be that you're applying for an equity fund or a debt fund, you already have, you know what the requirements for those funding is. So one, are you registered? Do you have a shareholders agreement such that when they ask you what is the composition of this business, how is your shared structured, what is your vesting structure, all of those things are readily available. It's not at that point you're calling for the services of a lawyer to help you put things together. So all these things are very critical. One thing that is also important is what nature of exposure do you have to other credit institutions? Because that could affect you if you need to access capital. We will do a credit check on you. And if you have too much exposure, nobody will want to expose more to you. Or if you have a bad credit with existing finance lines that you have engaged. So that is very critical. We also check your financial exposure. Your social profile is one of the things that we also go out for these days. So while you are living your life on social media, we advise that you be more careful because even the financial institutions are now checking out for some of these things. Lastly, because we are now an impact-focused bank, right? When you apply for credits, part of the things we check out for is what are the potential outcomes and impacts of this financing on your business. So we want to know what is the impact in terms of climate, in terms of gender, in terms of inclusion, so all things like that. And you are scored on all of these metrics, which determines if you'll be able to access such facility or not. All right, sorry, I've taken a bit of time. Thank you.
Thank you so much, Babatunde. And to the last point, to those people that are always posting lavish lifestyles on social media, be careful, be careful. Thank you
They
so
could be
much.
lavish if it's their money, right? But not the startup fund, not founders, not investors fund, rather.
Well, yes, that's fair. Thank you so much. Because I saw Etemore also clapping at that. Okay, so my next question is for Nené. So Nené, please, can you walk us through the funding options that Invest International and Access Bank currently offer sustainable businesses? So products available, what's the eligibility criteria, any other thing that we need to know about them as well?
Okay, all right. So let me take a quick step back. Invest International is a Dutch financial institution. We like to call ourselves impact investors, so we are really like impact driven. And we also try to focus on gaps. Let's say when you look at gaps into the funding market, that's where we like to focus on. In that way, we are additional to the market and not competing with the market. SDGs are important, mostly 8 and 13, job creations and climate action. And we value the Dutch link. So if business contributes to the Dutch economy and future earning capacity, and we are active in all markets except from the Netherlands itself, and exclusion list or exclusion sectors. And speaking of sectors, we cover mostly 5: agri sector, renewable energy, healthcare, sustainable manufacturing, which is interesting for you, I guess, and public sector as well. So we also work a lot with different government on public sector funding. And if you look at the collaboration with Access Bank, I mean, okay, commercial banks, we all know it, we all about it, but I think they found each other in their shared passion for sustainability in that sense. And if I look through the bank, we also now have a sustainable finance accelerator where we kind of fast track projects that have more impact, trying to green our books, not just for new projects, but also businesses, but also for existing ones, right? So I think when you look at the funding aspect itself, then you have to look at availability, right? Is there funds available? I believe so. So it's about how do you structure it in a way that pricing makes sense as well. So availability, pricing, and structuring becomes very, very important. And if I zoom into different instruments that we have, and this is really instruments that speaks to Dutch businesses, but also their local partners, right? So for example, startup funding. Startup is hard to fund anywhere. It's either an intervention fund or, but with commercial banks, don't even get started. So startup funding is made available and it can help do investments or start operations and it can go from as low as 50,000 euros up to 1.5 million euros, right? And tenors can vary. It can get as soft as 7 years, but you know, to just give a range. And we also have development capital, which actually helps prove a concept. Usually banks are interested when there's a proven concept, bankable business case, etc. This is an instrument that can actually cover 50% of the project cost, capped at 1 million euros, to prove the concept. So let's say a Dutch company could attract it from the Netherlands to set up a business here with local partners. It at least gives them that first start. And aside from that, we also have support for large corporations from 5 million above. Those could be direct loans, but it's in foreign currency, and public sector funding. So at the end, it's all about how to structure those available funds and instruments to really try to match and give an affordable pricing and term to the client. And doing that, combining with, let's say, Access Bank here locally, who most often also has guarantee funds within the bank that could be applicable to some businesses. And of course, BOI, one of my questions to you, Tunde, was also this facility that you spoke about, will it be channeled through the bank, like the 5% you mentioned? I retained 5%. Will it be channeled through commercial banks or not? So yeah, in a nutshell, those are main instruments we work with. So we really look at it case by case basis and try to pitch in wherever we think can help the final numbers.
Thank you. I think it's a yes from Babatunde to your question.
Absolutely. So just quickly respond to that. Yeah, we're speaking to Sterling, we're speaking to Wema, and if you could give me a contact, I'm willing to speak to Access as well. Yeah.
Okay.
I know they are competitors, but it's fine.
I know.
But we are open and willing, absolutely.
Okay. All right.
Great. All right. So first question for Etemore. So what types of investors and instruments would you say are the most active in your network? And what are some of the things that entrepreneurs can align in terms of their proposals to attract these opportunities? I think her network is frozen or something. Etemore, can you hear us? Yeah, I think it's
I
frozen.
think she's frozen.
Yes. Okay. All right. I'll just go back to Babatunde and wait for when Etemore is back. Okay, yeah, she just dropped off. So I already saw a question similar to what I was going to ask for BOI. So I know many founders, they're always scared of long approval cycles. So are you able to give like a realistic timeline in terms of application to disbursement, and if there's anything that they can do to shorten that timeline?
So I wouldn't say that cycle is solely dependent on appraisals. So see a loan process as a relationship between two partners. So it kicks off with you send me an application, or you push in an application, and then I ask you for some legal documents and then conditions precedents. Most times, this delayed, in fairness, is shared between the applying party and the appraising party. The first question is, how quick can you get your documents to me, right? Like I said earlier, in most cases, businesses tell you, oh, I submitted, this is the third month, I've not heard from them. But there's a lot of back and forth that happens within that process. So when you tell them so e.g., you could ask them things about ESG, they don't have policies on ESG. So then there's a lot that is evolving in the new world of credits that businesses are not privy to, right? So by the time you ask them that, they go for another 2 or 3 weeks to go prepare that document or get templates on it. And this affects the throughputs, even internally, and the outcome of how quick we could turn around your application. But going straight to your question, how long will it take? In ideal situation, within 2 months of your application, in fact, in a very worst case situation, you should get value. But in events where you don't have it, also the best I think I would just go the route of advice in this case to say, while you're applying, or even before you set out to apply for credits, get the requirements, right? And make sure that your documents are almost ready, right? Make sure they are ready even before you put in your application, such that as your main application is coming, you have all your legal documents, you have all your conditions precedent set out, you have your security, or at that point, you're already discussing your security. There are cases here at the Bank of Industry when they will ask you to get a bank guarantee, right? And you go to your bank. If you don't have good credit notes with your bank, then it becomes another long story. This bank is not willing to give you want to switch to another bank. So that's why I said it's hard to say it is the it is the fault of an institution, be it BOI or even a commercial institution. We just have to, as founders, we just have to be credit ready, be it that you're going the route of equity or you're going the route of debt. Get all those requirements, be always ready for them. Get things ready such that even if you meet a founder or an angel investor, within 5 minutes, you could pitch to them. And potentially, it doesn't have to be a demo day to raise a capital. It could just be an opportunity at a restaurant. And that makes it for you. So I don't know if I directly answered your question or I'm protective of my organization.
No, you answered the question. And I mean, you said something, and I see that people also really struggle with that in terms of measuring their impact. So I'm just wondering, and this, I think anyone can answer this question. Is there anything that we can do to help these entrepreneurs in terms of ensuring that they have all the requirement documents? Because sometimes some people don't know what, so if you tell them, oh, do you have any impact document, they might not really understand what they're meant to do. So is there any way, or are there any tools or any resources that we can even share such that we're able to guide them on how to put the application together?
I can take that, because that's what we do as an organization to help businesses articulate their impact. There are many tools out there in the alphabet soups of frameworks, tools you can use. There are 2 tools I'll just, advise you to please have handy. I don't know if you can Google Global Impact Investing Network IRIS Plus. They are a set of indicators, matrices that help you to articulate your social and environmental impact, as well as your governance. changes that you want to report to your investors. Then the SDGs have about 169 indicators that you can also use, to articulate what changes do I want to report to my investors, and things like, hard data to show that you are making considerable change. For instance, if you want to put an articulation of how you are reducing, tons of waste diverted from landfill, or your materials that you're recycling, you can use the IRIS Plus. They have indicators to track that. You can use the SDG standards indicators, SDG 9, SDG. I'll go through some of them just to help in terms of guiding you on what to do. The CO2 emission avoided. Then another part, again, which investors are looking at, and your ability, to create jobs, particularly to underserved communities. You want to also demonstrate that you are incorporating people at the base of the pyramid across your value chain, as suppliers, employees, distributors, right? And you are reporting that in your impact report. You also want to look at, access to clean energy and your usage of water. How are you reducing that? So for founders, it's important that you want to present your impact matrices. You want to have specific, measurable demonstration, not just narrative alone. Narrative is great, but be specific. I want to give you some examples, that you can even consider depending on what your business is focusing on. For instance, you want to speak about how much, tons of plastic waste you've been able to reduce, in 6 months. You want to have that clearly articulated. And let's not forget about the additionality. You want to contribute, to waste reduction, for instance, in Lagos State. So those kind of metrics is what you want to be able to clearly articulate in your impact report. It's also important to show causality, because sometimes we are so disconnected with from our activities and the outcomes we want to present. So link your activities to your outcomes. That means that you must have a clear theory of change as a business, right? We want to show, for instance, how your refill station is reducing single-use plastic users to about 80% annually. Those kinds of causality is so important for you to demonstrate as an impact focus business. And then thirdly, what can you do to clearly articulate the impact you're doing in terms of connecting it or tying your impacts to your finances? So how are you going to show how your impact is driving customer loyalty, for instance? Your revenue, how that is, you're taking advantage of revenue regulation to increase or boost your profitability. So these are ways in which you can use impact matrices, to help you demonstrate impact and report it with credibility. I think lastly to add is transparency. How can you validate your data in such a way that it's credible and there is evidence to back it up? So these are some things that you can do as a mission-focused enterprise. Thank you.
Thank you so much. The first thing you mentioned, I think someone wasn't clear on, I think you said, was it Global Investment Network High Risk Plus?
I'll put that in the chat. Is Global Impact Investing Network, GIN, IRIS Plus. I'll put a link there. So you take a look at it, and also SDG.
Yes. Thank you so much. I hope we're all taking notes, because I know some people have also reached out to us. We have a community of over 500 people in the circular economy space, and sometimes people reach to say, oh, I don't understand, I'm meant to measure impact. What if I don't know? What if I've done like a couple of years and I wasn't measuring anything? How do I backtrack certain things? So I'm glad that you touched on all those points. I just wanted to ask the other panelists if you have any other things to add on this in terms of showing impact. Okay, I think that's good.
I think it's well covered. Yeah.
Okay, thank you. Thank you so much. So my next question is to Okay, I just got distracted by the question on the chat. My next question is for Nené. So beyond providing capital, are there any other things that you do from your end in terms of strengthening business plans, for example, advisory, market connections, technical assistance, so that the projects you're funding, they are not just finance, but they're also market ready and sustainable?
To some extent, let's just say we leverage on the trust aspect coming from the standing of both institutions to create a sort of network where we promote new connections and new trade. So in terms of connections, yes. We don't do technical assistance, but we collaborate with others that do, for instance, sector specific, where we can share pipelines or refer companies one to another, not only for debt funding, but also for equity funding. Like from the Dutch desk, we focus more on information, banking services, of course. So that network that I mentioned and capital, in a nutshell.
Great. Thank you so much. So my next question is for Etemore. I think that was the first question before the network issue came in. So impact investors would normally talk about investability, and I think you've already covered some of the things that you and your peers would look for in an early stage circular business. But I just wanted to ask that question again in case there's something else that you may have missed that is important.
Yeah, thank you very much. So I'm not an impact investor. I build the impact investment ecosystem. So I interact with a lot of investors and kind of like have a good understanding of what they require. Every investor would require. So I would just use an acronym to explain this, so that we can understand. And I'd like to add a fourth dimension, which is very important for impact investors, because investors who are investing for impact, I was so glad when Tunde mentioned that BOI is now looking at impact matrices. So impact is really a concern for every investor. So 4 things I would say. First is the viability of your product. Second is the commerciability of your product, scalability, and then impacts. These 4 elements are so important for investors to look at. So the viability of your product speaks to whether your product works. Does it work, right? Does it solve a real problem? Can it deliver reliably? So investors will assess things like your technical feasibility. Can the product be produced consistently and meets performance standards? Is it durable? They'll test durability of the product as well as operational readiness, your supply chain, your logistics. Production processes, are they in place to enable you produce the product consistently, reliably, and to meet the demand if your business should scale, right? Then commerciability is another very important thing that investors look out for. And this refers to the product's ability to succeed in the market, right? Can it be sold? Can it be adopted? Can it scale commercially? So investors will be assessing the market demand. Do customers want your product in the first instance? Are they willing to pay for it? Revenue model, is it going to be profitable? Do you have the right pricing strategy? And then finally, competitive edge. How is your product different from any other solution out there? And I really want to hinge on this commerciability, particularly for circular ventures, right? Because so many of the circular ventures I see have to do a lot of work in terms of shifting customer behavior, right? And getting to a point where people want to accept and adopt and use your product. So it's a journey, right, for CE businesses and not a sprint, as the case is expected to be for many of you. Then scalability is another very important thing to think about. How are you going to grow without proportionately increasing the cost of scaling that business, right? So investors will be testing for replicability. Can this model be replicable and replicated across other sectors, or can you expand to new markets? Your operational efficiency to ensure that your operations can support your growth. And then how are you going to leverage technology to help you automate some of your processes so that you can scale? The final one I talked about, which is a very important dimension, particularly for mission-driven enterprises like CE businesses, is your ability to make a significant impact with your business. So investors will be testing your environmental impact. For those who are focused on, delivering measurable outcomes for environment, things like your climate matrices, your emission that you're avoiding, the waste reduction, and how you are managing resources and reporting that with credibility. I mentioned that in my previous, conversation question that was asked, your ability to create jobs, across your value chain, and then reporting with impact. So, I mean, these are 4 elements, that investors would really consider before they invest in a business, particularly in for the conversation today, CE businesses, right? So they're not separate elements; they are interconnected. So a viable product must be commercially attractive to investors. It must be scalable in a way that is efficient, resources are used efficiently, and then deliver clear impacts that aligns with the investor's value as well as, global sustainability standards.
Thank you so much. And I think your points pretty much summarize what the other panelists have said. So viability, commerciality, scalability, and impact. Those are really the 4 most important things. And it's literally what everyone has said in different ways. So I hope we're taking notes to everyone that's listening on the call. Thank you so much. Okay. Oba, how much time do we have? So we can know how many. Is Oba still here? Hi, Oba. How much time do we have? Just to confirm how long we can go.
So we can start to take questions from the audience now.
Okay. So before we take questions, just one question to all the panelists. Is there anything that we haven't covered that you believe is important for everyone to know in terms of what we're discussing today?
I could think of something. Looking at your case and your situation, make sure you distinguish what do you really need in terms of foreign currency, or in terms of local currency, because most projects you also import equipment, for example. Also look at what is the impact of the energy on all of that, because sometimes energy has more instruments available to it, and it also impacts your business a lot. And then try to find a way to match those in an advantage.
Thank you. Babatunde. Okay, I think he may have stepped away from his system. Etemore, any other theme that we haven't covered that you believe is important?
Yeah, I think some things that Tunde talked about, which really just, made me reflect on how businesses raise funds, right? We need that patience to raise funds, particularly for mission-driven businesses. It's not a sprint, it's a marathon. And fundraising is friend-raising. You want to get your funders, your investors to trust you. Babatunde spoke to that. They need to first invest in you. So you need to establish that relationship in the first instance and go on that journey. There'll be a lot of challenging, things that you face, right? Lots of no's before you get a few yeses. So how do you remain true to your vision and gift the world your products or your services? Sometimes I like to, there are enterprises I would say that we've been working with for 5 years. Many of them are frustrated and many of them have, stopped, believing But I just want to encourage everyone, please, it's a journey. Raise friends first. Let them trust you. Build the right system and think system. So build a system to help you manage efficiently your resources, right? When revenue is low. So you need to be very strategic in terms of doing that so that you can go the long haul and then you can start delivering value when you have the right processes in place with the right team. So these are some of, so many other things to say, but I think I'll just want to stop there because this is a journey. So get ready for the ride. Thank you.
Thank you so much. Babatunde, any other thing to add from your end?
Yeah, so it's an advice to founders, and I'm one too, by the way. The advice is that we should solve real problem, right? I think one challenge you also have as founders is I'm just passionate about this thing. So be that the market is ready for it or not, I just commit my passion, my zeal, everything into it, get co-founder. And by the time you do all that, you launch and it's like, hey, nobody's willing to take up this. And then you now get into I want to raise capital. So we need to watch out for actual problems to solve, not stuff that we perceive as problems, superficial problems that we're trying to solve. I think that is very critical. And secondly is in the cost of raising capital, right? There's a lot that investors look at. They want to know everything that you have invested. They want to know how much you are trying to raise. And one thing they would also calculate is your what YC calls majorly bond rates, right? So if I'm raising $500,000, for instance, they'll look at what's my revenue, what is my cost of operation, and how many months or years will it take me to burn off that cost. And they know that potentially I'll be going for another capital raise. And nobody wants to invest and in 1 year or less, you're telling them you want to dilute them again when they've not seen value. So we need to be very careful and understand some of these things as founders. It's not just so much about you raising capital. There are many nuances to it. And if you don't understand it, you won't know why you are getting the many no's. There is nothing bad in getting no's from potential investors. It makes you better, to be honest, right? And at times, it also saves you from giving out that much equity because if you raise too early as well, you get to let go so much, and which you might pay for later. So I think everything works together if you know what you're doing. So that's my advice.
Thank you so much. Thank you so much, everyone. So my key points is understanding what you need in terms, just like Nené said, understanding what you need in terms of FX or actual local currency. What's the impact in terms of energy? And just like Etemore said, fundraising is friend raising. Your team composition is very important because at the end of the day, your investors are investing in your team. Yes, you might have a really great idea, but if the team is weak, if there is no governance, there's no structure, it's only a matter of time before it crashes. So just like Tamara said, fundraising is friend raising. You have to learn to build systems to manage resources, solve real problems. And yes, if you go for pitches and it seems like people are not really excited by a problem, you might need to go back to the drawing board. Don't be defeated. If you're easily defeated, that means you're not even ready to be an entrepreneur because entrepreneurship is not beans. Some people just focus on 9 to 5 because it's really not beans. I can relate because, man, especially with plastic recycling, the way the market has gone up and down. When we started, we're buying used bottles at 60 naira. Now it's up to 600 naira in just 2 years. And your investors are expecting you to deliver profits. So you're like, some people say, well, let me go back to my 9 to 5. This thing is not for me. But you have to keep pivoting to say, okay, what else can we do? This can't be the only thing. Circular economy is a big space. What else can we play in? Should we diversify into advisory? Because there's so many other things we're good at. So never just give up because it's not easy. It's not meant to be easy. That's why it's entrepreneurship. I mean, everyone here represents a business that has taken time to modify their operational processes and they're stronger because of that. So another thing that I also advise for myself and everybody else on the call is don't be comparing yourself with other people. You don't know their journey. They're all very different. You didn't all start at the same time. So let me just go on to quick questions. Let me try to scroll to the beginning. Let's see. Okay, how long does an application take? BOI answered that. I remember that question was for Babatunde. How do you or your organization support waste pickers cooperative society? Does anyone want to answer that?
Can put some BOI on the spot.
Babatunde leaned
I
back.
think I would have to do a rescue call to my renewable energy group. So I would, yes, we are impact focused, but we have to be sustainable as a bank as well. So except you are seeking CSR sort of funding, maybe for specific interventions, that's a different thing you could write to the bank. Besides that, if you set up a business to for whatever it's worth, right? And you need a line of financing, you can always approach the bank irrespective of how small it is. We do financing to as minimum as ₦1 million. To also add, we have state offices in 33 states, right? 33 of 36. So, and all the addresses are online. Feel free to walk into any of the BOI offices and just go through the financing process. Even if you know, in some case, you might not even genuinely need it at this time, but just walk through that process so that it prepares you for when you will need it, right? That experience will not be wasteful by the time you actually need that fund. Directly to your question, there is no special intervention for that. If you need CSR, you could write. And if you need financing, please approach the bank.
Thank you so much. Okay, let's go to the next question. So for a startup who has an MVP and is using locally made equipment to prototype, who has not really demonstrated any impact and has only sold just a few of the products for market validation, is he eligible to apply? I think this is for BOI.
Are you eligible to apply? So you've shown some traction, right? Yes, you're eligible to apply, but one question I would also ask is, if you look at your revenue, right? So your revenue over your cost of operations, will you say you are viable to apply for credit at this point, right? If you know you are not, you might have to bootstrap for a bit longer before you go into the lines of debt financing. Else, I think that's like the best advice. Just check your financial structure, your model at the moment. How much revenue are you making? How much are you incurring in terms of operations? And what will be the period, both moratorium and the repayment period for your facility? Are you able to pull it through such that you don't ground your business?
Thank you so much. Okay, we have one more question. So question addressed to Nené and Etemore. How does a startup frame a coherent narrative for investors without appearing unfocused, where their solution or intervention evolves around building multiple products? Should I take it again? Okay, so how does a startup frame a coherent narrative for investors without appearing unfocused, where their solution or intervention evolves around building multiple products? So I think what they're saying is, we have multiple products.
Yeah, I think it's clear. Yes. I think it's very clear. I don't know if I'm going to be able to answer this question totally, but it is important that first and foremost, that you are clear on the problem that you want to solve. Tunde spoke to that when he was giving his closing thoughts. You need to demonstrate that you are solving a real problem. So if you have multiple products, that is even great because it also diversifies your potential earning income or capacity to earn. So you want to have I would always like any enterprise to have a theory of change or a log frame that helps you join activities, to your outcome. And then you might want to have all of that for each of your products, right? And then your potential revenue streams that will come up from each of these products, right? So if you have this articulated, clearly, and then the market opportunity, because if the investor wants to know strength of this product? Is there a viable market? Are customers willing to pay for this product, right? If you're able to clearly show that in your presentation and how this links up with each other, right? I think your investors will be happy to look in, a little bit deeper. So there are two things that we want to do: either invest in your business as a business, or invest in that product line where they see maximum return. Let's not forget, investors are in business for returns. What are their impact investors? Whether they are, commercial investors, whatever they are, even philanthropy. So even for you to get a grant, right, to demonstrate your impact, they want to know, at some point, will you be able to get commercial capital to scale? So having this mindset is very important. Yeah, thank you. I'll now hand over to Nené. Nené, you can listen to your thoughts.
Well spoken, very true. Don't confuse us. So as long as your storyline is clear, and I'm assuming that you have different aspects to it because they interrelate or connect to each other in a circular way, which is a beautiful thing to see, but it's good to articulate it to know the clear outcome, but also the clear revenue stream.
Yes, thank you so much. I think that was the last question. Oba, do we have any other questions that came from before the session started?
Not at all. We've exhausted all the questions in the chat, I believe. Yes, I think we're good now.
Okay. Thank you so much to our panelists. I've learned a lot. I don't know about anybody else, but for me, I've learned a lot. My note is full. Thank you so much. Thank you. And thank you to Oba, CIP, and NCIC for creating this session. I know a lot of people have had issues in terms of how do I raise funds? Where do I even raise funds from? Who do I talk to? Where do I start? And I really hope that with all the nuggets that have been shared here today, you're able to understand the next best step that you need to take. So Oba, I'm going to hand over to you. Thank you.
Thank you so much, Anita. Thank you, everyone. Sorry, I'm trying to do a lot of things at the same time. So I want us to take a picture together. We'll take a group picture. Can we all turn on our videos? Deborah and the comms team, can you please help us take a screenshot so that we have a group picture?
Well, location is not okay too.
Okay. So if you want to be a part of the group picture, please turn on your video. Deborah, please let me know when we've taken it, because I had to connect on my phone.
Is it done?
Deborah, is it done?
No, so give us a few seconds, sorry.
Okay.
Okay.
So while we wait for Deborah and the team, so let me just round up. So thank you so much to all our speakers, to our very own community member, Anita, the founder of Atunlo. We are very much delighted at the level of knowledge that you have shared. And I'm sure that all the different entrepreneurs in the room, and also those who are not entrepreneurs, have learned one thing or the other. I think one of the key things that would be a takeaway for me is the fact that the journey of entrepreneurship and product development requires grit, requires persistence, requires a lot of commitment. And, I think one advice I would also give to entrepreneurs is that don't stay too much attached to the innovation that you have. Sometimes you are very much attached to the innovation and you're not thinking about the market. So because also the investors want to see what the potential in the market looks like before they can put in their finance. So don't stay too attached, because that's one problem that we have also with many circular entrepreneurs. You're very passionate. You think that particular idea is just great, but you're not thinking too much about what the market is looking like, what's the viability, what's the commerciability, and all the other things that you've heard today. So the journey of product development needs intentionality and needs you to keep iterating and keep doing the whole process, going over the whole process again and again. So thank you very much. Deborah, are we good now? Have we taken the picture now?
Yes,
yes.
we're taking a couple.
Good. Thank you so much. I didn't pause, but it's fine. So I would say that we'll round up at this point. Thank you so much for joining. You can follow us on social media. There are two organizations. We are Secular Business Platform. If you search for us on LinkedIn, on the Instagram, you see that our. Oh, yes, we have it here. So good. Thank you so much, the comms team. You can see, please ensure to follow us. And also, if you want to join our product development community, you can see that it's the link on the screen. You can just quickly take a screenshot so that you have, you can join later. Yes. And of course, it's a wrap. Yes, the comms team has said it. So bye, everyone.
Let me
Enjoy the rest of your evening or morning. Okay, Anita,
Yes.
go ahead.
Sorry, I wanted to say one last thing. As you were speaking, I just remembered. So at Atunlo, when we started in 2023, we started with plastic recycling. We made a lot of mistakes. We got in too soon. Yes, we spent some time working with people just to understand, okay, what do we even start with? And when we started, the market looked good. We decided, okay, let's just do plastic bottles because that's the easiest thing to go into. And then the prices just started going up and down. We bought multiple machines that we thought we needed because everybody had those machines. We saw returns. Right now, we sold most of it because we realized that the time to value for those machines are quite long. The electricity costs eat into the eventual profit of those materials. So there's no point. And then next thing, you see how the prices of plastic bottles were just skyrocketing because people became more aware that, okay, my plastic bottle, I can collect it, give it to an aboki, I can get some cash. So it went from 16 naira to 600 naira in literally less than 2 years. So naturally, most people will say, I'm not doing this again. But we sat down and said, okay, what else can we do? And now one of the things that we've realized is we're not meant to do everything by ourselves. We have some partners who do further processing that we work with. In some cases, we're a middleman. That's a revenue opportunity. In another case, because of our relationship with our suppliers, they ask for some other things in the same space, like in the same recycling space that we can provide. For example, we have people that say, okay, we need jumbo bags. And we're thinking, okay, we can just buy and sell jumbo bags. That's another revenue line. We're supporting people. And the next thing, we're like, okay, we have a really good network. And I mean, we can do advisory. We can work with corporates to think through how they want to reduce their operational emissions, their financed emissions, or any other ESG projects that they need to implement, and they need a partner. And that's how we're able to create multiple revenue streams. So just to add to what Oba was saying, yes, sometimes the markets might look like your solution is dead on arrival, but you need to pivot to other things. Don't be closed-minded. There's something else that you're good at. And if you think you're not good at other things, just speak to your current partners, the people you supply products to. There may be something else that you realize, I can do this very easily. And that's a new revenue stream. So let's also be very open-minded. I just wanted to quickly touch on that. Thank you.
That was really fantastic. Thank you so much, Anita. Yes, this is we've come to the end of the session. Have a lovely evening, everyone.
Before you go to the end of the session,
okay,
I want to say that I appreciate you very sincerely. Definitely, I will want you to flash the contact again so that we will be able to join with you. We are into repurposing of village wastes, and we will definitely want to interact with you the more to see how we can have mutual exchange of ideas and convey this area. There is a lot of potentials in the management of waste in the village ecosystem, which you find in agro and forest residues. The potential is extremely great. People are ignorant of what is there. It is not comparable to what people in plastics are doing, which is the aim thing now. So definitely I will want to share these ideas with quite a number of you as we progress. Thank you.
Fantastic. We are willing to listen. We are very much available. So you can take our contact or you can join the community as well. That's currently on display.
Yes, I will want to join your community because you see, this is a new area that I sincerely feel that it can provide. I'm an old man, I'm well over 70. So I would say that it's an area that can help to provide a lot of jobs for the young people. And the profitability of the thing is you can do it, conversion of the waste to energy and repurpose of the waste to useful products, most especially in agro-industrial processing and into wood preservation.
Yes, fantastic. And I just saw a message drop from Mr. Etemore Glover. So she said it's why stakeholder engagement is very important, and understanding materiality from their standpoint is key, and designing solutions from, of course, the perspective of from their perspective. Yeah, this can provide you with better ideas to make impact and increase your revenue. So yes, I know that there are a lot of ideas, popping up, and I know that we don't have all evening. So I would say that this is the wrap. This is the last wrap. We've tried to wrap up. So this is the last wrap. Yes. Thank you so much for joining. Have a lovely evening.
Thanks a lot. And Oba, thank you for showing me Rotterdam a little.
Yes.
All right, bye everyone.
Okay, bye-bye.
Bye, everyone. Thank
All right,
you.
thank you, everyone. Bye.
So cool.